Hey everyone, this is Dan with Data Trend. Today is Wednesday, February 17th, 2016. It's about 2:30 p.m. or so Mountain Time. The market's closed a half hour ago. Well, we had another update today, and we were really scrambling sort of on the upside to get this position adjusted higher. This was the upside expiration break even in the March CIB as of yesterday, and this is it as of today. And so there were a couple adjustments we had to make to just sort of scramble and move this trade higher. The market finished up at 10.11 and some change, up 1.54%. So it was pretty strong in here. There was some selling that kind of came into the market late in the day. You can see the wick at the top of the candle, but it's more than anything, it was kind of a lack of buying, I would say, really, than any significant selling. It was just sort of a steady drift lower as the afternoon went on, without a lot of conviction in either direction. So on the daily chart here, one of the things we can see is this was the position when we closed the day yesterday. So the upside expiration break even was around 995. The downside was down around 915-ish or something like that. And we had moved this trade lower because we were getting threatened on the downside. And originally, this candle here, where we ticked all the way down to 942, was what forced us to make this downside adjustment. So we pushed the trade down to here. And pretty much immediately after I made that adjustment, the market turned around and went racing higher. And so it's okay. I mean, these things happen sometimes. We're still in the trade. We're inside of 30 days to expiration. We're taking a little bit of heat, but we're still healthy and within the guidelines. So we're just going to keep rolling with it. And my hope kind of is that the market's really been flailing about in here. I mean, we're up here at 1035, down to 942, back to 1016-ish. My hope is just, if nothing else, that the market decides to settle down a little bit in here somewhere. And if we can do that with as few days to expiration as we have, we should be able to pull a little bit of money out of the trade, or at least just sneak out of it. So we'll see how it plays out. But we've been seeing some pretty big moves, and it's easy to get chopped out with the moves lower and the moves higher back up like this. Let's go ahead and drop down. This is the 65-minute time frame for the Russell 2000. You can see the 10-day simple moving average is the red line, and the yellow is the 5-day simple moving average. So the market got up and above those moving averages, and they're starting to turn higher. It looks like the 5-day may be getting ready to cross over the 10-day. It doesn't mean it's a buy signal. It just means that the 5-day trend has been stronger than the recent 10-day trend. We've had really no relief on this move higher up from that 942 level, and we're coming into what could be an area of potential resistance on the upside, but we certainly don't know that it will be resistance. And there's nothing to say that the market can't hop here and get right up above this 1016 into the 1020 and make a move for this 935, which is where it was. And once it gets above 935, then we're evaluating new targets. And I'm certainly not going to predict that that will or that won't happen. It's just something to be aware of. For the time being, as long as the market seems contained by this 1016 to 1020 area or so, which is this darker line, as long as the market remains down below this, I'm not overly concerned. The new expiration break even's up here at about 1025, so it has a little bit of room to move up to there. We're in okay shape. When we went into the close yesterday, we were sitting right around our expiration break even, which was down here at that time around 995. So this morning we had a gap outside the body of the butterfly, and that was fine. So we just added to the position and then moved one of the lower ones higher. So let's go ahead and take a look at the risk graph so that makes a little bit more sense. So just for reference, what I've done here is I've set these price slices, one down here at about 915, which was roughly the lower expiration break even yesterday, and then another at 995.26. And so this, as of yesterday, was also the upper expiration break even. And what we saw this morning is the market gap open around 1,000 or so. It pushed higher up to about 1016 and then came off a little bit towards the close to end at 1011. And so the position as it sits now looks something like this. The Greeks are negative 1249, the gamma is negative 18, theta is $44. So it's really ticking up here as we get closer to expiration. Vega negative 70. The open loss on the trade is negative 171, but we're still in control here, and based on the size of the moves that we've seen and how much the position has been defended, this is really sort of a small victory to not be taking major heat. Right now we have 29 days to expiration for the March options, so the position has some time to work, and it should begin to work relatively quickly. If we just even take this forward a couple days, the point at which we start coming into profit pops all the way up to 1005. So we're in pretty safe shape, even though the trade happens to be down a little bit of money at the end of the day today. I'm not overly concerned with it. If the market does continue higher, then I'm going to become more concerned about it, and we'll have to evaluate it. But for the time being, based on the size of the move and the speed at which it has made that move, I think the likelihood is that the market's at least going to rest here, if not pull back slightly. Maybe into the 1,000-ish area, and 995 wouldn't be unreasonable. If we drop back down to here, a decline to 1,000 would really not even fill the gap higher from today. So 995 would fill the gap higher from today. So to see the market sort of settle down in here a little bit would be good, and there's certainly a possibility of that happening. If it doesn't happen and it gets up above the 1020-ish area and seems to want to hold this to make a move higher for 1035 or even beyond that, then we'll have to reevaluate and look at the next upside adjustment and what to do then. But for the time being, I'm okay. We're just going to sit in here like this. So just so you know, the way that we got here today is we started yesterday, or we began the day today, went into the close yesterday with two butterflies centered down here at 955. And what I did today is two things. So the first thing I did was I added two new butterflies at 980. And you can sort of see those right here. So we have the 980, the 925, and then the 1035. So there are two of those 55-point butterflies centered at 980. And I did that right around the open, say within 20 minutes or so of the open when the market was trading around 1,000. And that really didn't give the position a lot of room. It only gave it out to about 1,005, the expiration break even 1,007, maybe something like that. And so what I did as the market continued up to that level and through it, when the market was closer to 1010, 1011, sort of where it is right now, what I did is I sold out one of the lower butterflies that we had down here at 955, and I bought a new 50-point butterfly up here at 1,000. So you can see here, there are another two shorts here at 1,000, along at 950, and then another at 1050. And so the orders down here to close out the one of the 955 butterflies is there. This was the original buy order for the 955 that was closed out, the 900, 955, 1010. So this is the position as of the close, including all of the adjustments. We're still okay. We're still in the trade. One of the things that I was considering as sort of a short-term adjustment is if the market seems like it maybe wants to push up higher here into the 10 teens, something like that, it might not be a bad idea to roll up one of the shorts from 955 to 960 or even 965 just to flatten out the T+0 line a little bit. I didn't do that today just because we kind of came up to that 1015-ish level, and then from there we backed off, and it just didn't seem like there was a lot of conviction up there on the highs, as though it really wanted to go higher, at least today. And with the size of the move higher that we've had over the past few days, I think there's a greater likelihood that the market's at least going to slow or pull back slightly. It doesn't necessarily mean that it's going to come tumbling all the way back down to test the lows, but just the rate of ascent should slow somewhat. So at any rate, that's all I have for tonight. I hope it helps. If you have any questions, feel free to shoot me an email, info@thetatrend.com. Thanks for watching.